Monday video of mine. Haven't done a Monday video in I think like 3 or 4 months. And today's topic is going to be on how to calculate liquidation prices of other traders and how to trade based off of others' liquidations. I looked for videos, looked for articles, and I looked for resources to try to find if anyone had ever talked about this, and I couldn't really find anything. A lot of people talk about how to avoid getting liquidated on Bitmex or how liquidations work on Bitmex, but a lot of people haven't really talked about what's a strategy that one can use to find where people are going to be liquidated and how do we trade based off of that. So today's video, as you can see, was Patreon suggested, and if you want to suggest any videos, you can hop on the Patreon. So I put this up. This is not part of the strategy or the tool part of the video, but this is important theory for understanding how exactly liquidations work. So if you want to pause the video and read over this, you can do so. Basically what it's saying is if someone goes 100x long, it takes a 0.5% move against them for them to be liquidated. It takes a 1% move against them for them to be bankrupt. That's the bankruptcy price. Now you don't want to mix up the bankruptcy price and the liquidation price. Because when you get liquidated, when price goes down and a trader gets liquidated, they have no more control over that position. Instead, Bitmex is going to place a limit order that will try to exit that position. And how it does so is down here, and the excess will be put in the insurance fund for that. So basically, all you have to know from this is liquidations are actually done through limit orders trying to get filled, not exactly market orders. Now, another thing that is incredibly important to think about is leverage and percent move against for them to be liquidated or for you to be liquidated. So if you go 100x long, if you open a position that's 100x leverage on Bitmex, it takes a 0.49% move down for you to be liquidated. When that happens, if price goes down 0.49, you will be forced out of your position and you will lose all of the margin that you had put in that position. That's what liquidated means. If you short 100x, then it takes a 0.51% move upward for you to be liquidated. And then here it is for 50 and here it is for 25. Now, that's, great and all for knowing that's how liquidations work. A lot of people talk about that, and I think it's pretty simple stuff. But where it gets a little bit more complex, and I think kind of fun and creative, is where can we find price spots where we know that traders are opening 100x, 50x, or 25x longs or shorts? Well, we don't. But what we can do is look at a price volume chart on Bitmex, as you can see here. And what we can look for is high volume 1-minute bars. And this is what I mean by that. So if we look here, and I see a high volume bar here. So let's put ourselves in the position of traders who had 100x longed and 100x long during this major volume spike. Now, the reason why we want to look for volume spikes is because that's going to show us when a lot of traders are buying in at the very top of the market or selling at the very bottom here, here, and here. So with this volume spike, one little trick that we can do is we can go to our tools here. We can go to price range. And if we think that someone had opened a 100x leverage position at the very top, which is 40.29, we can actually draw that down 0.49, and that's the price that someone would be liquidated at, right there, at 4,009.5. So what happens when price goes to 4,009.5 and we get those traders who had 100x at the top liquidated? Well, we get a high volatility, high volume move, then price rebounds upward, as you can see here. And price typically does rebound upward after liquidating traders. Some stuff here you can just look at is price goes down, liquidates some, goes up. Liquidates some more longs. After that, it goes way up, liquidates the shorts, then goes down. Typically, price bounces against the liquidation. So if you see green, price is more likely than not to move down because it just liquidated the shorts, so price moves down. Here, price just liquidated some longs, so price went up. Here, price liquidated some longs, so price went down a little bit, then moved up. Price liquidated some shorts here, so price went down. Price liquidated some shorts here, so price really went down, and so on, as you can see. So a lot of traders know that that's how liquidations work. When a trader is liquidated, a lot of the times price does go in the other direction. Not always, but I'd say more often than not, we get a bounce, a retracement, or a more of a reversal type of pattern. But how can we actually take advantage of this? Well, the only way to take advantage of it is to know exactly where traders are getting liquidated at. And that is why we do this. Because if we know that some traders are going to get liquidated around here, we can put buy limit orders around this level, put stop losses below that, and then get filled on this move down, and then try to take profit a little bit higher. But if we wanted to construct a full range for all of the traders who had bought here, this is how we would do that for 100x leverage. So what I'm doing is I'm drawing 0.49 down from the absolute bottom of the candle down to here, 0.49% down from the absolute top of the candle, because remember that this is the amount of price move that would require to liquidate these guys. I'm going to go to rectangle, and I'm going to connect the area between right here and right here, and I'm going to delete this. And let me explain exactly why and what this is. So what this represents is anyone who had bought here in 100x leverage will be liquidated here. Anyone who bought on 100x leverage here will be liquidated here. Anyone who bought on 100x leverage in the midpoint will be liquidated here. Anyone who bought, 100x leverage here is going to be liquidated here, and so on. So we can see that as the liquidations begin, they go down to here. So what that means is basically anyone who had bought from here down to here just got liquidated like that right there, and price went up. And then as price went lower down to here, anyone who had bought at these lower levels here gets liquidated here on the price tail, and price moves back upward. Now, you can also do this with 50x as well. Remember, 50x for long is minus 1.47. So if we do this and we get the price difference and we go to 40.29, if we draw 1.47 down, we know that that's the price that traders who had bought that top will be liquidated at. Right about there. So at that price, let me zoom out to show it. Yeah, so at this price right here, right below these lows, is where we're probably going to see some liquidations when price, if price ever comes to this level here. And if you wanted to, you could also draw it down this way. But that's just one high volume 1 minute candlestick bar. You can also look at others as well, like this whole range of heavy selling. And you don't always have to take just one high volume candlestick bar to try to project where traders who 50x or 100x are probably going to get liquidated. I could take this entire range. I could go from here to here. In this spot, I'm expecting that a lot of people have probably shorted here. So let's calculate where the 100x traders probably are going to get liquidated. Well, that would be anyone who had shorted here. It would be 0.51 up. So 0.51, that's there, as you can see. And also 0.51 up from the bottom. If anyone had shorted the bottom of the market there, unfortunately, then that would be here. 0.51 is there. 0.51 is there. And I'm going to put this a little bit lower because that's not 0.51. So this range from here to here is where we expect that a lot of these shorts, traders who had shorted at this bottom down here, they would get liquidated around this level, and price does go lower after they get liquidated. What you can also do is you can check if your guesstimation of where these traders are going to get liquidated is correct. So I can go to the beginning of January 8th on tensorcharts.com/u/Bitmex stats. That's where we get data for liquidations. Red is longs being liquidated and green is shorts being liquidated. And if I go to beginning of January 8th to see if people were getting liquidated. The beginning of January 8th was, this says January 7th. Is this a little bit behind? I'm going to refresh this. Oh, it's because of... I was really confused. I was on a different time zone. Yeah. Okay. Forget that. It's January 7th at 9 in the morning. Yeah, that makes sense. So at about 8:30 to 9 in the morning. January 7th. Time zones always, confuse me. Yeah, so you can see that shorts did get liquidated. About 71,000 short contracts have been liquidated there. Just as we, had calculated that anyone who had shorted around here gets liquidated there. And then price reverses. So that's one thing that we can do, is we can look for those high volume 1 minute bars. Another way you can look for where are these 100x and 50x traders coming in from is rapid reversal points. So whenever you see a price makes a top and then rapidly goes down, or price makes a bottom, then rapidly goes up, what that's doing is that's trapping any trader who had taken a large leverage position at that level as price heads up to their liquidation level. Some examples of that will be like here. Maybe we got some buying here and then price goes down so quickly that they get liquidated and they don't have time to exit because they didn't place a stop loss. Kind of an example here too, the place where we had seen some people get liquidated. Rapid reversal, price goes down. So one thing that we could do, if we wanted to do this, is we, go to the top. Let's measure 0.49 down because that's for longs at the very top, and then also at the more I'll do about this top right down here as well, minus 0.49. So around this area, we expect that some traders are going to get liquidated at 9:40 January 7th, which is 9:40 January 7th. Yeah, right here. So you can see that about 218,000 longs liquidated right there before price goes up a bit. So that's price go. We can assume that longs did 100x buy this, and they get liquidated. We can buy here for nice, little profit if we want to scalp that, or we can short here and then take profit here. Both do make sense. Now, what we can also do is we can prepare for what if someone had 50x'd. That would be minus 1.47 for them to get liquidated. So let's measure 1.47 down. It's right near the bottom. Not surprising. Price goes down, liquidates anyone who had bought that top, and then reverses right back up. And when we see, longs did get liquidated there as well. About $1.9 million worth of liquidation. So this would have been a great spot to place your limit buy order, to place it at the 50x liquidation level if one had bought up here. So really anyone who 50x bought anywhere from this level to this level would have been liquidated right there. And that would have been a good spot to set a buy order to take that. All right, so those are rapid reversal points and looking at 1 minute high volume patterns. One last thing that you do need to keep in mind, and this is the most important. You want to look for price points that have not been crossed. So what that means is, let's go back to our initial example here. We know that a lot of people probably bought here to here. We have a volume spike. A lot of people bought there. But if price, instead of making this retracement then going lower, if price had actually just continued to move higher, what are these guys going to do? Well, you're in a losing position because let's say I'm putting you in the mindset of you just 100x bought. You're in a losing position, then you go into profit. I think a lot of those traders are going to exit their positions so that if price ever does flip down, I don't think you're going to see as many liquidations. You're not going to see as many liquidations because these guys got out of their losing positions at a slight profit or at break even, right above price. So what you want to see for good patterns for looking for where a trader's likely to be liquidated at, we want to look for highs that have not been crossed and lows that have not been crossed. That's going to show us that those traders are trapped and that those traders are relying on their liquidations to be hit because they don't have the discipline or they just don't want to exit their positions at a loss. And that's how we make money, by looking at moves like this and moves like this, and taking advantage of Bitmex traders getting liquidated. All right. So remember that price points have not been significantly crossed. And that's also why I said rapid reversal points are important. Like this point right here never got crossed again. So if there's anyone who bought here on, let's say, even 25x leverage, who has not been liquidated yet, they might still be holding a losing position because they don't want to take a loss. So if they had done that, we can actually calculate what's the price that they would be liquidated at. Well, minus 3.38% if they had longed. So we can do the very top here, down 3.38. That is, okay, that's low. Right there. So about 3,900. If anyone had bought that top, around 3,900 is where they would be liquidated. And even if we do, something a little bit more zoomed out, I haven't checked this yet before I started making the video, but if anyone had bought the recent top at about 40.80, 3.38% down is down here. So if a price move comes down to here, anyone who had bought a 25x leverage in this price zone will be liquidated around this area. So that's interesting. And anyone who had done 50x leverage at the very top, they're already dead and gone, liquidated. But the interesting thing is you can see that and this is, again, pretty sinister, but this is what the market does to people who go on high leverage. Notice here, price goes right down to where all those guys got liquidated at minus 1.47%. So that's liquidating all those 50x longs who bought here. They get liquidated, and then price goes a little bit higher before this. So these patterns are important, and it is really important to keep these numbers in mind with if this price moves this amount in this direction, how many 100x's, how many 50x's are going to lose all of their money, how many 25x's are going to lose all their money, and you can easily calculate it using this if you want to take a screenshot or something. All right, so now let's go back to this and go to the final part. How do we take advantage of this? We know how to search for prices that traders are likely to be liquidated at. We know how to gather the information for actually seeing them get liquidated, which is here. But what do we do about it? What we can do, three things. The first is use magnetization. So some traders say that price is magnetized to move toward liquidating traders and toward stop losses. If you believe this, what you can do is, let's say you calculate that a large amount of liquidations are down here. Dangerous, but you could sell here and you could take profit once price liquidates these traders, if price ever goes down, and then just put a stop loss right above. I'm not saying price is going to go down or up. I'm just saying that there's a large amount of liquidations that will probably occur if price begins to go lower. So you could sell ahead of that and try to target those guys. And as they get liquidated, you could think about exiting your position. The second method is to set limit orders at a calculated liquidation price, betting on a reversal. So more often than not, when traders get liquidated, in the short term, price goes in the other direction. So if you calculate, for example, let's say you made a quick 30-second calculation and you say, I'm seeing a lot of buying here. I want to buy when price goes down 1.47% because that is where the 50x longs will be liquidated. Well, down 1.47 would be around here at the very top. If for any trader who had bought at the very top, they would be liquidated there. And if I want to take one more level, if any trader had 50x'd, let's say here, let's go down 1.47. That's like right at the bottom, yeah. So around here is probably where a lot of liquidations will take place. And they did because a lot of Bitmex longs got excited. They bought this with 50x leverage or even 100x leverage. 100x leverages they got liquidated right away. 50x leverage, you could see they got liquidated on this move. And any price lower will liquidate the 25x leverages. And the reason I'm signaling out that move is because of how high its volume was. You can see that that move does have a large amount of volume, so that's why I wanted to measure it. So that's one thing you can notice as well. You could have put a buy orders. You could have put a few buy orders around here and then had a awesome, quick profit. They get filled, price goes right back up. Because it liquidates them, goes right back up. Well, you calculate this. You see 100 Xers get liquidated here. And you see the rest of the 100 Xers get liquidated here. So you buy, quick profit. You buy here, quick profit. Harder said than done. Harder done than said, or whatever the heck it is. But that is another thing you can do to trade. You can set those limit orders to open a position at a calculated liquidation price. Third is not something I'd really recommend. Trade against a recent liquidation. You see longs getting liquidated here, so you buy. You market buy or limit buy, you take profit. You see longs getting liquidated here, you buy. You see shorts liquidated about here, you short. You see longs liquidated here, you buy. You see longs liquidated here, so you buy. I mean, it's an okay strategy, but I think that 1 and 2 are a little bit stronger than trying to trade after the fact. And that's why trying to calculate liquidation prices can be very helpful for setting your limit orders. Final thing of this video, because I know this part 1 is really going on a while, is you can use CoinFarm. CoinFarm.online is the URL. CoinFarm gives you the exact prices that traders had market bought or market sold at in the last hour. So if you see a lot of market selling at this level, you could say, what is 4,000.5? If a lot of people had sold there, what's a 0.51% move above 4,000.5? Because that's going to tell me where a lot of 100x shorts will be liquidated. Well, we can just easily calculate that here. 4,000.5 is there. And, I'll just use this tool. It's better. 4,000.5 is there. So we know that a 0.51% move up is here. So the answer is I wouldn't be shocked to see at 40.20, 40.21. Wouldn't be shocked to see some people getting liquidated, some shorts getting liquidated here, and then price maybe reversing it back down for a retracement or a full-on reversal. You just do that. You could look at this and then figure that out. Or you could look at where have a lot of people sold, what time did a lot of people sell, what time did a lot of people buy. A lot of people sold at 10:01. This time zone is UTC plus 9, so I'm going to have to change it to UTC plus 9. A lot of people had sold at 10:01. A lot of people sold at 10:01, but the issue is here that if anyone had sold here, they're in profit right now. So I don't really think that many of these guys are going to get liquidated up here. So this one wouldn't be the best, but then you can see other levels where traders might not be in as much profit, like at 10:04 even. 10:04 was here. If you had shorted here, you were going to get liquidated with a 0.51% move around here. So that's that same level right there. So that's one way you can use CoinFarm to try to find liquidations. And remember, always try to go back to your cheat sheet of this right here to try to find percent price change in order to liquidate a position. All right, so I think that's going to be it for this video. We've covered theory of liquidations. We've covered why liquidations occur and how they occur. We've covered how to possibly screen for potential prices of liquidations by using volume and price, and also by using tensor charts. And I'm going to be coming out with probably a few more parts of this series to look at different ways and more advanced techniques that we can use to try to look for where other traders are going to be liquidated at. So I'll keep you guys posted. If you have any questions or concerns or comments, feel free to leave them below, and happy trading.